Hello everyone, it's Wednesday, January 14. Today we will review the charts for the euro and the pound to assess potential market moves. Earlier, the euro and the British pound briefly tried to regain ground after the release of US inflation figures yesterday. The dollar extended the bearish trend and began on December 24. Thursday's consumer price data for December 2025 showed a 0.3% monthly gain after 0.2% rise in November. While the print matched consensus, it signaled that inflation resumed upward momentum at year-end. This could prompt the Federal Reserve to pause its rate-cutting cycle. Nevertheless, the January Fed meeting is expected to pass without policy changes, with the first significant shifts in monetary policy more likely in mid-spring. Data also showed that core inflation rose by 0.2% in December, below the 0.3% economists had forecast, and the annual core reading held steady at 2.6%. Separately, Fed official Alberto Musalem said inflationary risks are easing and expect the rate to reach the central bank's target by the end of 2026. He indicated there is a little case for an immediate change in monetary policy and does not expect additional rate cuts in the near term. Meanwhile, federal prosecutors have opened an investigation into Jerome Powell related to the Fed headquarters renovation. But no charges have been filed, and prosecutions appear unlikely in the near term. Nonetheless, the probe has added to political tensions and is seen as another source of pressure on Powell as the White House prepares a decision on his successor. Now let's take a look at today's macroeconomic calendar. The first half of the day offers no major data releases from the euro area or the UK, apart from a speech by Bank of England policymaker Alan Taylor. Thus, market attention will shift to US producer price data till later in the session. Since the release is expected to cover only November, its immediate impact on sentiment is likely to be limited. Most likely, all eyes will be on US retail sales, which are forecast to have risen by 0.5% in November after showing zero growth the month before. Traders may also watch US existing home sales and the current account. In addition, market participants will be listening closely to Fed officials, including Neil Kashkari, Raphael Bostic, and John Williams, for commentary on recent inflation prints and the likely path of monetary policy in light of inflation, labor market, and retail sales developments. Turning to technical analysis, the 1-hour EUR USD chart shows that the pair approaching its 1-month low, so bulls are likely to step in around 1624. A false breakout at this level would trigger a buy signal and could drive the euro back to 1.1653. A break in consolidation above 1653 would bring the pair up to 1676 and probably open the path toward 1.1697. At this level, I would recommend going short on the rebound, targeting a 20-25 pip pullback. Short entries at 1676 and 1653 should considered only after a false breakout, anticipating a continued bearish move. A break below 1.1624 would likely extend the sell-off toward 1.1591, where it would be prudent to consider long positions on a false breakout. If the price drops further, long entries on the rebound could be valid around 1.1558, aiming for an intraday correction of about 25-30 pips. As for the British pound, the downtrend is less pronounced than the euros. A false breakout at 1.3417 would trigger a buy signal, likely pushing sterling up to 34.52, where sellers may reset control. If the price breaks through and consolidates above 34.52, the pound could rally to 34.84, a level where a false breakout would make it possible to look for shorts. The most distant target will be 1.3514, where I would recommend going short on the rebound, aiming for a 25-30 pip move. Alternatively, active selling around 34.52 would be a reason to go short, targeting a move back through 34.17 toward the 1-month low and 1.3392. At these level, buyers are likely to step in, producing a bounce of roughly 13-15 pips. If this level fails to hold, it would be wise to wait for a deeper decline to about 1.3370 for long entries, targeting a 20-25 pip rebound. Best of luck to everyone.